Tesla stock cannot be stopped. This thing is up almost 100% since January 1st. Absolutely insane. There's other stocks in the stock market that have been totally dead money since January 1st. It's so interesting, the different types of stocks in the stock market. I want to talk in this video why it's important to have growth and value in a great stock portfolio. Before that, I'm Austin. I'm a stock market investor and I'm a co-owner of cloudmusicsuite.com. Okay, on this channel we talk all things money and stocks and personal development. Thank you for subscribing before the first 100 subscribers, okay? As a thank you for that, I'm gonna show you a picture of my kitty cat. She's off camera right now. She likes to stay in the room whenever I record. So she's listening, she's getting smarter about stocks. Speaking of stocks, I also have a private portfolio that you can go ahead and check out in the Patreon, link in description and pin comment down there if you wanna see every move I'm making in the market. Just made that, just started up. It's off to a great start. Go ahead and check it out. Okay, let's get into this. So Tesla stock and Lockheed Martin. Those are the two stocks I want to talk about in this video. So these are both stocks that I hold in my own big dog account, right? My own, that no one can see it, okay, except for me. Tesla stock I've owned for many years now, and my cost basis is below the $30 mark, somewhere right around $30. Okay, so it's been a great ride for us. I've only sold like 2 shares ever, and that was a pre-split basis. I've held everything else, although I've thought about selling it a bajillion times. All right, and I'll talk about the reasons why here in just a sec. And then a stock I bought about 18 months ago, about a year and a half ago, is Lockheed Martin stock. So first thing is that these charts that I want to show you is Tesla. This is Tesla on a 3-month span. And we can see from the beginning of 2023 to now, there's been almost a double up in the stock price. So if you entered into the stock, you stepped into Tesla stock around $108, somewhere around there, around the lows, you would be up almost 100% right now. You almost got a double up in like a month's time, 5 weeks time. That is absolutely ridiculous. This thing was like a spring, coiled, ready to pop. It dropped way too far to the downside. So these growth stocks are super volatile, and I would consider Tesla a growth stock. Very high revenue growth, they're spending a lot of money, but they are a profitable company now, which was not the case a few years ago, and this thing has just been on a tear for years and years and years. I'll just pull up a 1-year chart. A 1-year chart looks terrible, okay? This thing is down massively still, even though it's had almost a double up in terms of movement of the stock price. We were above 300 a year ago, and we're down to 200, all right? That's a massive sell-off there. That's a 50% drop, okay? But if we look at the 5-year span, Jesus Christ, okay? Up an insane amount. The COVID drop on this chart looks like nothing. Like it's right after the January 2020 mark there on the chart, looks like absolutely nothing, just because of how much it ran up. But around those $400 marks, this thing was way overpriced. I personally haven't bought a Tesla share in years and years and years. I didn't buy it after any of these run-ups. I thought it was disgustingly overvalued for a long time. I considered stepping back in and increasing my position around the $100 a share mark around January 1st. Decided not to, just held through. I'm fine without having increased my cost basis, still below the 30s, so I'm super happy with Tesla. That said, I just want to compare that to Lockheed Martin. Lockheed Martin is a defense contractor, right? They make F-35 fighter jets and missiles and all these types of things for the US government. Almost all their revenue is from the US government. So they're heavily dependent upon government spending on defense side of things. So some people get a little scared of that and some people don't like it because it's a war stock. That said, I think it's a great company. I think it's a really well-run company with an amazing management team. So Lockheed Martin is basically a value stock. I stepped into this stock about 18 months ago because I believed it was an undervalued asset. And when I hopped in, let me show you this little chart here. I'll just put up a 5-year. So when I hopped in, it was around that $324 mark. So we can see that dip, the last dip before it went on these crazy runs up. And you know, these look like small periods of time, but this was months and months and months that it took this stock to rise that much. And some of this has been accelerated by the Ukraine-Russia situation that we've got going on. But a lot of it is just great execution, quarter in and quarter out. And the stock was down to like below a 12 trailing PE. And now we're back up to like a 21 trailing PE. So we're edging on overvalued again. I haven't bought a Lockheed Martin share in 18 months. I felt as though after that run up it had real quick, up to about $400, I was like, okay, I'm just gonna sit with this. I'm gonna collect my dividend money as I chill, and I let this story play out over the next 18 to 24 months, and then I'll flip this into the next stock. My goal with Lockheed Martin was to get around a 50% return, sitting right now at like a 36% return. So story hasn't really played out all the way yet, looking at somewhere in the low 500s for a price target, and then I'll decide again if I want to exit. I'll reevaluate and decide do I want to just take my 50% profit, or do I want to let this thing run a little bit more. I'll decide at that point if I want to de-risk that position or not. But I know this for sure. Very stable company, value play, not gonna drop like crazy whenever the whole market drops. I'm up on that position over the course of the market dropping 20%. You know, the S&P got wrecked over the last multiple months, but Lockheed Martin doing very great because it's a value stock. It does great in rough times. I thought we were gonna have some rough times ahead whenever I bought about 18 months ago. Happened to be right. I could have been wrong. This could have easily gone to the downside for me, but it didn't, right? And I've been able to collect that dividend money along the way, and I've gotten a nice 30% return. But if we look at the last 3 months, it's not great, right? It's not terrible. It's only down about $10 over the last 3 months. But if you just look at it, it's pretty much dead money over the last 3 months. As compared to Tesla, or even just the 1 month span, we're up a teeny tiny bit in a 1 month span. So the volatility is gonna be a lot less on these stocks. If it has a great earnings report, it'll move up a little bit. If Tesla has a great earnings report, we're getting a 20% jump. Lockheed Martin has a great earnings report, 4-5% jump, something like that. And it's not even really based on market cap, because Tesla's market cap is huge, sitting at $655 billion for Tesla market cap. And then Lockheed Martin, $120 billion for market cap. So it's really about like how these stocks are valued. So this is my point that I want to get across here. It's so important to do two things. One, always have value stocks in your portfolio, and always have some growth stocks in your portfolio so that you can get the up whenever it's euphoria and craziness. These growth stocks are going to fly to the moon, unnecessarily high most likely, and you can choose to de-risk that position like I did. I sold a very small amount of Tesla shares, de-risk that position, or you can just choose to hold all the way through, hold through the down, hold back through the up. It's up to you. But also, while the growth stocks are going to the moon, normally value stocks are getting disrespected. Either they're getting sold off and money's rotating into the growth stocks, or they're just dead money and they're just the fundamentals are getting better and better and better, which means they're getting more and more profitable. They have higher and higher revenues quarter in and quarter out, but the stock price is doing nothing. So what's happening for you is you are able to get a better deal on that stock because it's either dropping while the company fundamentals are getting better, or it's staying flat while the company fundamentals are getting better. So it's like the spring ready to pop off, right? And then once we get a little bit of rotation out of growth due to regular old market cycles, rotation out of growth, money goes into value. Your undervalued asset gets back to fair value, and of course sometimes it can get up to overvalued, which is close to where Lockheed Martin is getting, in my opinion, based on its fundamentals. But super important to have growth and value in every portfolio. If you want to see a portfolio that I'm building from scratch with a small amount of money on a weekly basis, about $50 into a Fidelity account, you can check out the Patreon. It's link in the description and pinned comment down there. You can see every single stock I'm buying in there. I give my thesis as to why I bought it at that price, what I plan to do. Am I going to increase the position? Am I going to de-risk the position? What's my general price target for it? Why am I buying it? Why am I structuring a portfolio how I am? Just started that thing up. It's looking great so far. It'd be a cool journey for you to be on with me. So go ahead and head over there. We'll see you next time.